Recently, the Northern California wine region was rocked when they awoke to the news that Silicon Valley Bank had collapsed overnight. Now, while Silicon Valley Bank's wine portfolio represented about 2% of their overall assets, it is estimated that upwards of 90% of the wineries in the Napa-Sonoma region were exposed to Silicon Valley Bank. Tonight, we discuss with Jeff Bursgard of Unity Bank how their bank and their wine niche actually loans to these wineries in Northern California, of which they've got 40 in their portfolio. Learn with us on SIP episode 130 what it takes to finance a winery, what it takes to get a loan, and how it's all reviewed. SIP episode 130, Banking and the Wine Industry. Thank you, everyone, for joining. My name is Martin Cody, co-founder of Cellar Angels, now in its 13th year of operation, and you are joining us on SIP episode 130. It seems like just last week, the entire world was shut down, and we decided that we needed a community of wine drinkers to get us through a pandemic. And now that is federally been declared over, we're not stopping. So SIP episode 130 is here. Eve, hello to you. Jeff and Jane are in the house. Ivy in the house. Hans and Caitlin. PG. Peter, I'm going to kind of single you out in a minute. Sean is in the house. Sarasota Sipsters. I can say that because that's not their last name is Sipsters. Some of you, I see some first timers here. Hello, Lori. Hello, Jim B. Karen, good to see you again. Always good to see the folks like Karen, Lori, Jim B, Jeff and Jane, Jan. I do see Nick D in the house, so very happy that you are here. For those of you that are new to Cellar Angels, I can tell you that we are a 100% direct-to-consumer company. You can go to the Cellar Angels website and you will see that we offer a curated selection of wines that you can't get at your local retail store, let alone your local restaurant. These wines are from limited production wineries, exclusively from Napa and Sonoma, and almost always never available outside the winery. Many of you this evening are drinking a wine from Ketcham Estates because you purchased the SIP kit. And the SIP kit is in the wine gifts section of the website. And I encourage you to get it because it now has the next 4 wines available for the next 4 Fridays. And there's some doozies in here, including one of my faves, the Jack's Cabernet Franc. So this is where you can get the SIP kit, sip along with the guests, and ask them questions like we're going to do this evening. But most of us have never experienced a run on a bank. And before we get to that, I do want to say that last week witnessed a couple of great examples of angels helping angels. The first one is Chad Angelo of Angelo Cellars, and I don't know if Chad is on this evening. Nelson and Liz, hello. Chad actually introduced some wine club members drinking drinks at the Broadmoor, and he told them about Cellar Angels, and people signed up for the wine club. So it's amazing how when you start talking about great limited production wines and you're a winemaker, you can actually just refer Cellar Angels, and we grow as a result. Tonight's guest is also an example of angels helping angels, because tonight's guest was referred to us by a Cellar Angel member who was on this evening, Peter G. So Peter, thank you for that. And the topic is one of interest because lately there's been quite a few stories about bank failures. And many of you were not around when bank failures was a movie. And really, this is our familiarity with bank failures. You know, don't look now, George, but I think that looks like a good old fashioned run on a bank. That's our familiarity with bank failures up until Washington Mutual in 2009. But lately, there's been a rash of them. And we're going to talk tonight on how that happens. More importantly, how it actually impacts the wine industry, because Silicon Valley Bank was quite well entrenched with the Northern California wine community. And I can think of no other person better to talk about the wine community and banking than tonight's guest. And I'd like to introduce Jeff, because Jeff is with Unity Bank, and Unity Bank has a very, very special niche of a wine division. So Jeff, if you would join us from the green room, perfect. Jeff Bursgard from Unity Bank is this evening's guest. Jeff, welcome.
Thank you, Martin. I really appreciate it. Yes, cheers. Try a little bit of the of tonight's flavor for the evening. So
awesome. So right before we talk about banking, I do want to talk about this week's pop quiz. There was only one correct answer. And the correct answer is, which of the following, and Jeff, you can jump in, which of the following is not true about rosé wine? False answer, rosé and blush. They are not interchangeable. Rosé is a sweet, I'm sorry, that was the correct answer. They are not interchangeable. Rosé is a dry wine. Blush is a sweet wine. So those two words are not interchangeable. It is true that rosé actually came before red and white wines, and color of a wine comes directly from the skins. And in fact, next week, we'll have Lise Asamont talking about the color and skin pigmentation and how it imparts color to the wine. And by the way, Provence consistently has the best quality to price ratio of all Provence of all rosé in the world. So for those of you that got the answer wrong, and there were many wrong answers. Several people answered the question wrong multiple times, Jeff. But Sandy O was the winner. So if Sandy is on, she is the winner. If she is not on, Kent D was runner-up, and Kent D's correct answer came in 18 minutes ago. So you never know if you could be runner-up, but if Kent D is not on the line, all of the money will roll over to next week's bingo card. And Jeff, it's not illegal to bank online or gamble online, as we now know, right? So,
of course not. Depending upon what state you're in, it'll be your local laws will determine what you can do.
Exactly. There'll be a DraftKings logo sooner or later on Cellar Angels, so we could do that. So I want to talk about the banking crisis, but first, well, let's talk about you. Where, like physically, where are you right now? And then talk about the niche wine division within Unity.
Sure. Well, I'm in Edina, Minnesota right now, which is a suburb of Minneapolis, or just south of Minneapolis in Minnesota. I grew up in a small little town up in northern Minnesota, about 6 hours north of here, close to the Canadian and North Dakota border. Agriculture, a lot of sugar beets are from there. So you're constantly surrounded in the agriculture industry. And as we know that I'm from Minnesota, I moved up to Southern California. I was out in Southern California for about 20 years. And I was a commercial banker out there. I worked for Bank of America, Merrill Lynch, Union Bank of California, and then found my way back to Minnesota a few years ago, and working for a real strong agriculture bank here. That we have about 16 locations, mostly in Wisconsin and in Minnesota. We're about 700 million in assets. But mostly we're small communities. In the Edina community, it's the largest community that we're in. Otherwise, we're in a lot of small communities that are 2,000 to 5,000 people in each town. So strong agriculture background. And somehow the owners were privately held, and the owners out of Wisconsin had a trip out to Napa about 30 years ago. They said, "Hey, they met somebody fantastic," and they decided to invest in their winery and finance them. And that turned into 2, and that turned into 3 and 4. And now we've got about 40 clients that are in the Napa area, the Northern California area, that are anywhere from their vineyards, their wineries, their vineyard management companies. So the FDIC and the federal government allows us to be outside of our marketplace if we have a specialty niche. And because we have been doing it for so long, we've created this specialty, we've been able to grow our business out in the Napa area.
So when they say they allow you to be outside of your marketplace, is a marketplace a geographical region?
Typically it is.
Okay.
You have to show that you are able to have contact with your customers. You need to know your customers. If you're going to have a depository relationship with them, if you're going to act like a full bank, you need to make sure that you understand fully what you're getting yourself into and who your customers are. And sometimes you do that by geographical area, or you do that by expertise in the industry.
Interesting. So Izzy, I see you. Thank you for joining. I don't see Doug R., who's also a super sipster, Jeff, and he's in Minnesota. So I don't know where Doug is this evening. If I had to place a bet, again, with the gambling theme, if there's some sort of a orchestra or symphony or amateur sporting event or local college basketball or women's basketball, Jeff is attending that this evening. Huge supporter. I'm sorry, Doug, not Jeff. Doug R. So let's go to your very specialty niche as it relates to kind of the wine outside of Minnesota, obviously had to do with what all of us have experienced at one time or another. Someone traveling to wine country and just going, wow, this is absolutely beautiful out here, talking to someone and then deciding we're a bank, we might as well get into it. Silicon Valley Bank obviously was the one that kind of triggered the most recent shockwaves in the financial industry. And they were very close to wine country. So if you are able to kind of walk us through that bank's history and its trajectory, who they loaned to, and then we can kind of get into what happened.
You bet. Yeah. Silicon Valley Bank is a very dynamic bank. I don't know how many years ago they started out, 30, 40 years ago. Typically working in the tech sector, particularly in the San Jose, Silicon Valley area. Had a lot of venture capital money that came in, a lot of hedge funds that they work with. And when you're working with hedge funds and you're working with the tech industry, people get a little bit of money. Next thing you know, they want to buy a winery, they want to be in the vineyard. So they started creating hedge funds and creating funds and super funds to be able to lend into the Napa area as investments. And as they grew the portfolio. They have a specialty niche. A gentleman by the name of Rob McMillan, who is fantastic, who's able to hold on to their niche there. But as they grew, they started taking on more risk. But it was a natural fit for them to be in the Napa Valley, just being so close to San Francisco and the Bay Area, and people that have a tremendous amount of wealth wanted to grow that and be romanticized by the grapes.
Yeah, it's interesting because, and I'd be curious if people want to throw some comments in the chat line prior to the news and the collapse of that bank, which literally was overnight. How many people had heard of Silicon Valley Bank? And as you're answering that, with a yes or no, or I have, I'm going to launch the first poll question because it has a lot to do with SVB. So Jeff just talked about kind of the size of Silicon Valley Bank and how fast they grew over a 30, 40-year period. They had quite a few $1 billion under assets or assets under management. So what percent of SVB's loan portfolio was winery related? Which is an interesting thing. And Jeff also mentioned Rob McMillan, and Rob is a scion in the wine industry because he produces an annual, kind of a direct to consumer, but an annual wine consumption report that is legendary. And it's a very important piece for the wine industry, especially the limited production wineries. So the answers are 1%, 2%, 3%, or 4% for those of you that are driving that can't tune in. Because I think this is simulcast on one channel. Jan Jensen grew up in Mankato. So
All right.
Mission Control grew up in Rochester.
Oh, wow.
But all right, we're going to give this 5, 4, 3, 2, 1. End poll. When you think about that, they had somewhere in the vicinity, and I don't know what the last number was, Jeff, it was like 16 billion or so, or even higher assets. But yes, 2% from what I've seen and heard and read, and a number of Forbes, Fast Company, Fortune, all of them basically say 2 to 3% of their portfolio was in the wine industry. Now that seems like a small amount of assets exposed to wine. However, about 90% or so of the wineries in the Northern California, Mendocino, Napa, Sonoma County at some point in time have exposure to Silicon Valley Bank. So even though 2% of their assets were associated with wine, a lot of the wineries that we know, that have Silicon Valley Bank exposure. So talk to us a little bit about the lending of that bank in particular. You mentioned that their customers were basically hedge funds, private equity, venture capital firms. They lend to other startups and pick it up from there.
Sure. And I'll confirm that Silicon Valley Bank winery division is still wholly intact. So the winery division with Rob is still intact. It hasn't gone anywhere. They didn't parse that out. They kept the name and they just added the word winery to it. So they had the way the Silicon Valley Bank worked. They grew quickly. They grew from about 50 billion in assets to over 200 billion in assets. They need there's certain thresholds in the banking industry that you want to, if you're gonna be a $1 billion bank, well, you might as well be a $2 billion bank. If you're going to be a $2 billion bank, well, you might as well be a $10 billion bank, and so on and so forth. So if you're going to be a $100 billion bank, then you really want to be 200 billion. They had reached out. They had a lot of hedge funds that they were working with, and they were able to, in a very quick time matter, within 18 months, go from 50 billion to over 200 billion in assets. That is astronomical rocket ship growth.
Yeah, that's not even a hockey stick. That's just straight up.
Yeah, and with that, there's a lot of stresses that happen. That's not a normal trajectory for a bank. It's not a normal trajectory for a community bank of any size. And with that, because they were exposed to the technology industry, they also had hedge funds that were invested in Bitcoin, and they were trying to shore up their deposits. And by shoring up their deposits, and they went out and they bought long-term treasuries. Yep. And they bought 10-year treasuries without a reset function on them.
And not historically a bad move for a hedge, if you will.
Correct. So they thought that the way they looked at it was they were looking at the long term. They thought they were safe in what they were doing. What they did not anticipate happening was interest rates rising so fast by the federal government, and what they became upside down very quickly. When interest rates started to hit them hard, and they started losing money on these treasuries, because these treasuries became absolutely worthless because nobody wanted them. Everybody wanted to have a higher yield on their treasury, on their investments. What happens to a bank like like Silicon Valley Bank or Signature or even First Republic, it's the falling knife effect. The knife starts to fall, and at what point do you grab the knife? And when things are falling that fast, there's just become panic. The depositors don't know what's happening. The hedge funds that have money in the bank, they pull the money out as fast as they can, and it's just a downward cycle.
Right.
It's very unique to what happened to that bank that would not happen to most other banks. It does affect.
You talk about the falling knife, and I mean, almost overnight, the ripple effect, at least through the wine industry, and a lot of the people that Cellar Angels knows, many of the wineries couldn't pay employees, couldn't run transactions, had no access to cash, had no access to their accounts, and it happened like that. So that had to be, I don't even know what one thinks, when you go to turn on your laptop in the morning and check, and accounts are frozen, the bank is closed, and you've got outstanding liabilities, you've got to pay for the materials behind me, you've got to pay salary and payroll, panic.
Mm-hmm. And unfortunately, a lot of them had, because of their tremendous wealth, they carried a lot of cash within the bank, and that are not FDIC insured.
Right.
Banks like us, smaller community banks, we have ICS accounts, and what an ICS account is, let's say you have $1 million. Well, we don't keep $1 million within the bank. We keep 250,000, which is the FDIC insurance. And then we broker out, or we work with other banks. So it's a group of banks that get together. Maybe there's 100 of us in a pool. And then we take that 250 and we evenly disperse it within these different 100 banks that are in this pool. So there's no greater
the 250
exposure.
Or the 250 you disperse, or the 750?
The 750,
okay.
Yeah. So we keep the 250 on here, or we equally distribute it out, so that way every bank is required to take something on. So you're equal footing with the other banks.
Smart, very smart. Yeah, that's shocking. But to your point, and we're thrilled because the entire division, Silicon Valley Bank's entire wine division, is still up and active, and they, no one was laid off, type of thing. And hopefully the fingers are crossed that the wine industry report is produced. But I know we're still trying to get some people to submit and fill out the form so that it's the same report from a quality standpoint that Rob has produced for many, many years, and something that Cellar Angels relies on from a statistical perspective to see. It gets into the minutia, what type of wine is selling in what region, at what price point, to what demographic. Is it foot traffic at the winery? Is it direct? Is it retail? I mean, they do some amazing number crunching.
Absolutely. And you brought up a really good point, where every region's different. even within Northern California area, the prices between Mendocino and Napa and Sonoma are greatly varied. They sway tremendously, and it depends upon what is the hot grape of the season. Sometimes there are market makers out there. These market makers are creating a value in certain grapes, and Merlot was having a terrible time right around the time the movie Sideways came out. That has changed in the last few years, where they stopped dumping cheap, inexpensive Merlot at the grocery store, refigured it out, and now they have some really high-end Merlots that the name Merlot is coming back tremendously.
Thank goodness. Although those of us that were Merlot lovers from long ago, we have seen the price increase because of it. So there is some downside to that. But let's not talk longer about bank failures, but let's talk a little bit about your niche, because almost all the sipsters on this evening, several of them multiple times, have been to the Valley or been to a wine region. I don't care if it's up in Ithaca, North Carolina, Central California, Temecula, and you get bit by the wine bug, quite honestly, very much like your owners did. And you think to yourself, hey, it's 25 below in Bemidji, and this is not a hell of a lot of fun. The tear ducts are freezing in my eyes. I think this Napa thing might have some potential when you go out there and you decide, why don't a bunch of us pool some money together and get a loan, and we can take a crack at this winery thing. So I'm curious, from your divisional niche, what does your portfolio of clients look like? Let's start there.
We have a variety. We're working with the smaller boutique type wineries. Our large, we have a couple of mainstream vineyards that we work with, but the most of them are selling direct to consumer, like you are. They've got their wine clubs, and they rely upon their wine clubs for themselves. They also rely upon marketing with the San Francisco Chronicles, trying to get their gold winners, their double gold winners, and trying to advertise that way. But our largest customer has about 1,100 acres in grapes. That's up in the Polk Valley. And then our smallest vineyard, they've got 4 acres, and they're in Sonoma. And then we have everywhere in between. The real interesting part is we get a chuckle out of it, and we're fascinated by it. We have some amazing winemakers out there. They put out beautiful Chardonnays and buttery, beautiful Sauvignon Blancs as well, and Rosé, and they've done a great job. And then we've got this little vineyard out in Sonoma that they market. Holy smoke! They are on the phone 24/7, trying to sell their club and trying to get everybody involved, and we wish we could put that much passion into all of our customers. So
interesting.
It's interesting where some people they're great winemakers and other people are great marketers. It's easy to grow a wine or make wine. Sometimes it's tough to sell it.
Yep. And everyone is familiar with the great line from The Wrath of Grapes, not the book that was required reading, The Grapes of Wrath, but a lesser known book called The Wrath of Grapes, which is a wonderful play on words that talks about it taking, if you want to make a small fortune in wine, start with a large one, because it is not easy. Now, it's also not easy, Jeff, because you are at the vagaries of Mother Nature. So as you are in this niche and kind of running the wine selection or portfolio process, how do you determine a group's loan worthiness that comes to you and says, here's our plan, and what do you think of it?
It really comes down to knowledge. You might be able to get a group of people together, and they want to go in. They want to buy maybe they want to buy a distressed winery. Maybe there's a winery that's a little distressed. It has deferred maintenance. They think they're going to come in and they're going to rehab it. It takes collateral. It takes equity. You're not going to get 100% financing. There's some people out there, they try to play the 100% financing game. The banks are comfortable doing about 50% loan to value on it. And if we look at, so let's say you're looking at a winery and it's $2 million. It's got a lot of
Well,
deferred maintenance on it.
Stop right there for a quick second. Well, you guys probably have some experience in this, but I think that's one of the things. Wineries are very, very difficult to produce a value on. So how do you do that? Knowing, like you just talked about, Merlot is changing, prices of grapes are changing. And so the value one year may not be the same value because they'll probably have inventory. So how do you determine the value of the winery to be even able to make the 50% loan?
You bet. The appraisal. So we'll go in, we'll work with the vineyard. Maybe they need to do a complete replant, start completely over. They'll hire an appraiser. An appraiser will come in. There's a lot of specialty ones that are in the Napa area and wherever you're at. You want to make sure you have a specialty designated appraiser who understands the water rights. In California, water is everything. They understand the frost system. Make sure they've got a good frost system in there. Make sure that they've got good access to transportation. Understand the heat cycles and the cooling cycles. Understand like I said, do they have a pond? Do they have a reservoir? That appraisal will come in and there'll be two numbers to look at. The first number will be as is. So if I were to buy this land as it sits, we'll just throw out a number and just call it $2 million. Well, if they replant, and there's 140 acres, so they buy 140 acres for $2 million, and they've got to do a complete replant of it. They got to scrape it down, put everything in. Well, you're looking at a cost of anywhere between $35,000 to $45,000 an acre to do a replant, and that is to put in a pond, to put in a frost system, all that good stuff. So you might be looking at $8 million when you're all said and done with this. So you want to see at full production. So you're not going to have any income for 3 years. So this is the value as today as you bought it. And then this will be the value in 5 years after you've replanted. You've got a couple harvests off it. You're not going to have income for 3 years. And you want to have a in full production number. And the bank will look at that and say, all right, great. How do we get to that 50% loan to value or 60% loan to value at full production?
And then 3 years later, you hope that everything has gone according to plan and you start to see some cash flow.
Correct. So the first year, so it's just like building an apartment building. So if you do a development loan, but you have to go in there, you're going to have to tear down the building that's there, or tear out the vineyard that's there. You're going to have to replant it. And it takes 3 years before those grapes, the first harvest you can take off. And that first year is not going to produce a big crop. No. The second year will produce a better crop, but it's not a full production. 5 years, at the 5 year mark, that's when you should be breaking even on that year's production. And then about a year 7 or 8, that's when you should be really, in your groove and in your jam.
And that's barring any type of catastrophe in the first 7 years, right? A fire, an earthquake, damage, hail damage, frost damage. So do you factor those sorts of, acts of God in type of stuff into the valuation aspect?
Yes, absolutely. Just like a normal farming, whether you're in Iowa, Minnesota, or California, you have multi-peril insurance, and we require that you have multi-peril insurance on your vineyards, and also that'll frost. You might have a special rider for frost. You might have a special rider for flood, but we require that you have insurance on that property and you want to have it just because the cost might take you 7 years to recuperate it, but if you have one bad year, that's going to destroy you.
Right.
And we've had a couple of assets or a couple of vineyards that got hit really bad with frost, and that year it's always the same thing with auto insurance. You just take it off for that year, thinking you're going to just let it ride, and that's the year you end up with frost.
Yeah, or getting an accident because you hit black ice with frost. Hans has a question. Overall, about what % of the guys you see your investments or the wineries are actually making money?
Every year? or
Well, no, there's a gray area. Makes
yeah,
money
there's
sometime once in a lifetime.
no,
Yeah.
there's well, they're usually it all comes down to deferred maintenance. So
Mhm.
our vineyards, our wineries, I would say on a year after year basis, 75 to 80% of them are cash flowing every year. But they all go in cycles. So maybe
Right.
there's a bad fire that went through Sonoma or Napa, and everything has smoke taint. And sure, you grew grapes that year, but you've got the smoke that's on them, or this film, and the grapes are worthless, and you can't sell them. You can't do a science tech to them. You can't change the flavor of them. You got to just let them drop.
And so,
But I would say 75 to 80%.
and so how often do you and your niche and your team review new loans coming in, during loan review and saying, how are we going to do this? And what is the volume of loans coming to you, or loan requests rather?
Sure, we review them. Well, every customer gets reviewed annually. So as a minimum, we're reviewing them annually, but we're talking to them all year long. All year, we're talking to every customer. How are things going? We're talking to them during pruning season. We're talking during growing season and harvest season. The wintertime, they take things off a little bit, but then they're right back in February and April and ready to go. We look at a tremendous amount of applications. Kind of weed through them pretty quickly, depending upon who is their vineyard management company, how is their expertise. So we really need to find out what is their expertise and what they're doing. So if you have a group that wants to buy a vineyard or winery together, who are they going to use to do the farming for them? It's glorified farming. That's really what it comes down to. It's, we call ourselves dirty shoe bankers. We're out in the fields with them. We got our dirty shoes on, and we're right there looking at their crops with them and the fruit, and make sure that it's all productive. But it really comes down to who's the vineyard management company they're going to use, because they're not going to be able to do it all themselves. It's not a family. You got four kids and you are going to do it. It's a real labor intensive business.
So Peter, Nelson, Lori, Michael, and the Sarasota Sipsters, which both have a few banks in their midst, are interested in putting together. We know some land that's available for sale, not distressed. We've got access to David Abreu's vineyard management team, and we've got access to a couple winemakers that we know that are well chronicled, and we want to buy 50 acres of land that currently has Cabernet Sauvignon and Merlot on it. Vines are 10 years old. Asking price for the property is 20 million. Peter was going to put most of it up himself. We said, no. We'll get a loan from Jeff. So what would that look like based upon what you just said? Because it sounds like it's the age-old thing. You're betting on the jockey, not the horse. You want to see who the team is and who they have behind them. What would be the process for the business plan review if that were to materialize?
Sure. The first thing we do is we look at the financials. It comes down to the financials of the wherewithal of the people that are in there. We look at their personal financial statement and the balance sheet. Look at the cash flow, what kind of cash flow they have. And then looking at the projections on the vineyard. If the vineyard is already producing, what does that look like? We'll do a debt service coverage. We'll look at how much debt is going to be taken on, and based upon the cash flow, the profits that they're having, and then we'll come up with a ratio of 0.12, or 120%. So for every dollar that you make, we want you to, or for every dollar that you borrow, we want you to have 120 or $1.20 to pay us back.
Interesting. And I would imagine there's various risk thresholds assigned to whatever the loan is. By that I mean, if someone's coming in and buying raw land and it doesn't have a vineyard on it, that has like you just went through earlier, a significantly longer ramp up time and probably massive capital requirements to buy tanks and stuff behind me if you're going to be building a winery and things of that nature, versus we're coming in, we're going to take over an existing operation. Here's what their cash flow is. Here's what the case volume is. Here's what, the amount sold is in the different channels of traffic, whether it's DTC or on-premise. Each one of those has an associated level of risk to you guys, correct?
Correct. There's ways we look at it. Do you have a grape contract? The number one thing is, if you are growing your own grapes, where are you selling them? Who's buying them? Are you bottling them yourself? Are you selling direct to customer, as you say? Or are you just selling the grapes itself to a Kendall Jackson or a Francis Ford Coppola or someplace like that? And there's other ways that you look at. Are you doing bulk wine? Or are you doing boutique wine? If you want to get in and you want to do a custom crush, so a lot of people that they get into the wine business and they don't want to have all the expense of buying all the equipment like you have behind you. They will go to a facility that will crush their grapes for them. So they'll harvest, they'll come in, they'll process, and then they'll barrel, and then you can either store the barrels on your own process or on your own property, or they can store the barrels for you there as you age them. And then you can decide what's the profitability of that? How big are you? If you're a small company, you probably want to do a custom crush. And then as you grow, you might be able to do your own facility and do custom crush for other people.
It's interesting. I mean, there are so many variables. I want Mission Control is going to throw up an image that you were kind enough to share with us with regards to what wine math. I love the phraseology there, and I promised there would be no math, but this is the extent of this is the extent of Cellar Angels math. So you've got. Why don't you, if you want, Jeff, walk through this, because this is the world you live in, right?
Sure. Well, and this is kind of an average. If you're doing some bulk wine, this isn't. If you're doing this, if you're doing your average production, one grape in one cluster, you got 75 grapes in a cluster. One cluster equals one glass of wine. 5 clusters, you get 1 bottle of wine. And then if you got a whole barrel, a barrel is you're going to have 300 bottles in it. That's just kind of the simplified math of how you're going to do it. 1 ton of grapes, which is about 2,000 pounds, it's going to roughly make 756 bottles, enough to fill 2.5 barrels. And with that's about 25 cases. So
per barrel.
Yep. So 25 cases per barrel. Now, with that, depending upon the quality of the wine that you want. Now, if you're doing bulk and you are harvesting every single grape that comes through, this is about that math. You're going to get. By the way,
Jeff's talking about every single grape. Those are the ones that are scorched. Those are the ones that are raisins. Those are the ones that are sunburnt. Those are the ones. That's what bulk production is. There's not a lot of hand sorting going on at these 300,000 case producers.
Correct. So, and you're going to get maybe 10 to 11 tons of grapes per acre. But let's say you're in the Napa Valley and you take a little bit more pride and you're a little more discerning on the grapes that you're bringing in, and you're going to not harvest every single grape. Maybe you're going to let half of them grow. So you're going to be thinning out throughout the year. And as you thin out, you cut half of the clusters out and you don't do anything with them at all. You just put them in a barrel and you ship them off, and you just let them kind of die in the vine or die down in the ground.
Yeah, a lot of folks that we work with drop fruit.
Yep. And then if you go to a nice place like Atlas Peak in Napa, which is a very high-end place to be, you're going to get about 2 tons an acre. And with that, you're really thinning out. You are just taking the best of the best. You're almost going on the cluster by cluster and looking what that's going to be. You're doing a lot more thinning, a lot more looking at it. And with that, you're going to get small. Your prices are going to go up as you do that. So obviously bulk wine, you're going to be getting, $10 to $12 a bottle, right? If you're in a medium, you're going to be getting about $40 a bottle. If you're an Atlas Peak, you're going to be trying to get $100 to $120 a bottle for price for a bottle of wine. So it all depends upon the quality that you're looking at, of what kind of yield you're really going to get in that area.
Yeah, I mean, it's fascinating from that standpoint, because obviously the producers that Cellar Angels works with are the limited production wineries. And many of the sipsters have met, all of our guests over the last 3 years. And these folks are in it for the romance. They're in it for the passion. They're in it to get their hands dirty. They're in it to produce fantastic wine. Yes, if they end up with black numbers as opposed to red numbers at the end of the year, that's incredible. Because when you think about it, the risks that we talked about earlier, we really only touched upon kind of Mother Nature. We didn't talk in great detail about cycle movements of the market and grape prices per ton. But then there's also, and you guys have to factor this into the loan portfolio review, cost of supplies, supply chain disruptions, and bottle price, corrugate price, cork price. Do you guys get into that level of detail when you're looking and assessing these things?
We do. That was one of the things that our customers got hit with during the pandemic. The bottle price, the cost of bottles tripled.
I was going to say glass doubled and doubled again.
And now it's coming back, a little bit more reasonably. But some people, they had to forego the new bottles and they were buying recycled bottles. And there was a tremendous market in the recycled bottle market. Same thing with cork. You have to decide if you want to do twist off or if you want to do cork. We saw a lot of people go to twist off, during the pandemic.
Interesting.
But your inputs, your inputs vary, and you got to factor that in at the end of the day. And you got to have an end market. So that's where the grape contract really, you want to understand who's going to be buying your grapes during harvest time.
That's a great point. And where your end point is exactly right. And so do you have and know now after the years you've been doing this kind of a comfort zone where someone comes into you and the team say, yeah, this is right down the fairway. This is great, versus someone that comes in like that 4-acre vineyard that you talked about. Now with the knowledge that you have that's going to be a tough road to hoe. How good are you guys at kind of discerning that overall, and how much does that knowledge influence whether or not you make the loan?
Come out to personalities. We look at it comes down to kind of the 5 C's of credit. The biggest one is character. You got to have character and capacity. We size up the people that are involved, and if they're a little shifty, a little shady, maybe they're a little over their skis, we stay away from them. If they are hardworking, down to earth people, and they're just genuine people, never been late on a car payment, we'll take a chance on those people.
Okay, well, never late on a car payment, Jeff. I mean, that's pretty. I mean, never. Come on. I mean,
wow. Okay. Maybe they're 2 days late. No, I'm kidding. But it really comes down. We'll take a chance on people that are hardworking and determined. And then we'll also size up what the ask is. Maybe they're asking for 200,000 and not 2 million. So we really size up what their needs are and what we need to put, what our outlay is.
Now that's interesting. And for the record, I haven't been late on a car payment in 16 years because we drive a 23-year-old car. So it's bought and paid for. Everything's good there. I do want, we're going to talk about Rosé, and I want you to take a sip of Rosé and relax a tad. I'm going to launch our second poll question, which is talking about actual bottles that come out of Provence. So Provence is the rosé capital of the world. How many bottles of rosé come out of Provence on an annual basis? 500,000, 10 million, 150 million, 275 million bottles. And fun fact, while you are all contemplating that question, I do want to let you know that France, God love them, they consume 1/3 of the rosé produced globally in the world every year. America, and Jeff, you may want to factor this into a loan review criterion, America consumes just 2 liters a year per capita. We rank 14th in the globe for rosé consumption as of 2020. Now, given the amount of day drinking that occurred between 2020 and 2023, that figure could have gone up considerably. But it just shows you how much upside there is in the American diet as it relates to rosé when compared to other wine drinking countries around the world. We're way behind. I'm going to end this poll 5, 4, 3, 2, 1. So interestingly enough, the correct answer is 150 million bottles of rosé. Someone do the math. How many, if we divide that by 12, how many millions of cases is that? Like, was that 12? Yeah, 12 million something. 12 million cases of rosé every year coming out of Provence, which is why it's the rosé capital of the world. And it's something that if you haven't been to Provence, you should go, because rosé is making a resurgence. It certainly is resurging, or not resurging, it's just surging in the US, which is fantastic because it's an awesome day drinking wine, pairs well with just about every type of cuisine. And I'm curious, Jeff, what do you see the threats to kind of the wine industry based on, you know, some of the banking scares that have occurred in the last 3 months?
It's the value. Well, the value of property that has gone up. The part that we want to make sure is everybody's competitive and they're buying property that they can afford. We're seeing as far as where we're at in the last 3 months, as a smaller community bank, you know, we're all relied upon deposits. We're all relied upon our cost of funds and our availability of funds. When people were nervous during the last 3 months, they pulled their money out of small banks and put them into the larger banks. And then those larger banks were not redeploying those funds back into the vineyard market. They didn't have the specialty that a smaller agricultural based bank would have. So that's something that is of concern. Is you got to find the right bank that understands and has the right capital behind them.
It's interesting because I kind of like your area of expertise and where you are geographically from a region perspective, because as you talked about earlier, it's an agricultural bank. You are in obviously great farming area in the Midwest. And for all intents and purposes, and everyone knows this, that is a wine lover, this is farming. It's just that it's not soybeans, it's not corn, it's grapes to a degree. So do you apply a lot of the same principles in your agricultural portfolio regionally there in Minnesota to kind of that same thing from there's cycles, there's harvests, there's springtime. I mean, there's a lot of redundancy there.
Correct. Our renewals, you know, we still have annual renewals on our lines of credit. So we put together lines of credit for our farmers to be able to do the producing throughout the year. The philosophies are the same, but it's understanding it's a longer cycle. That's the biggest thing between conventional farming and vineyard farming and grape farming.
Well, and maybe they do too. I mean, I can't imagine the vineyards are buying, you know, multiple 250,000 John Deere combines and things of that nature and the equipment, but I can't believe the equipment behind me is inexpensive and you're getting it at IKEA.
That's correct. That's correct. You know, you've got probably a couple $100,000 worth of equipment and, you know, in your screen behind you. And we also work with so we're also trying to keep up to date with what's happening within the legislation and also what's happening within the different guaranteed programs. We work with the FSA program, the Farm Service Association, as well as with Farmer Mac 1, Farmer Mac 2, working with their guaranteed program. So as much like people might be familiar with the SBA program when you buy a house or if you're buying a building, there's certain guarantees that these programs provide to banks, such as 90% guarantee or 50% guarantee to the bank to let us feel more comfortable with the credit that we're extending. There's also, if you're a first-time farmer, FSA has a program that helps guarantee a $600,000 loan for a first-time farmer. Also, there's programs out there if you want to buy a pond in California. California's environmental agency, they will offset the price. They will go in 50%. So let's say it costs you $200,000 to make a pond for a reservoir. Well, they'll help finance 100,000 of that.
So you can literally buy a pond.
You can build a pond. Yep. And then particularly with the drought issues that California has, they want to have some conservancy there, and they'll help you with those type of programs.
Fascinating. A pool, pond would be good for me. For those of you that know,
You got a Caddyshack?
Jeff G, lifetime sipster, has a great question. What do you, Jeff B, see as the biggest financial challenge to the winemakers who you fund and support? And what do you see as the biggest challenge to Unity Bank?
The biggest challenge that we see within the vineyard business, weather. It really comes down to weather and competition. What if you've got a drought in one area? Maybe people leave Northern California and they go up to Oregon. So we were seeing a lot of our customers that are diversified, that are in Southern Oregon as well as in Northern California, to be able to diversify their risk. And as Unity Bank goes, we're kind of the same way. We want to diversify. We don't want to be in just one location. We don't want to make sure that we want to make sure that we're spread out in different geographical areas. So if, God forbid that Napa got hit with a big wildfire again, or it knocked out that crop, then not all of our customers are hurting.
Yeah, no kidding. Jeff G is also famous for wanting and chanting and screaming Google Earth. So without further ado, before I have to withstand that onslaught, why don't we just go to Google Earth and actually show a few things related to Provence and Rosé. So you all recognize Texas, but this is not Texas. Here we have, wow, we've got a thumb up on Google Earth. I didn't even know you could do that. Let's zoom in to Provence. And we say it all the time, and Jeff knows this, I'm sure. Every great major wine region in the world has a maritime influence. This one in Provence has several. You have the Mediterranean, and anywhere you see light colors, for the most part, is not forests or mountains, it's vineyards in Provence. And it's amazing because it's a fairly big region. Here's the borderline of Provence, has a ton of shoreline. Mission Control just got back from Cannes. Had a lovely time there. No, not. I'm sorry, not true. I'm hearing from the booth. It's Cannes. I mispronounced it. She's not denying that she was there, but I mispronounced it. But when you zoom in and you look at Provence and areas that are lighter in color, there is a ton of vineyards. Everywhere you go in Provence is rosé grape growing. And it is just a magical, magical region. And not only do you have the Mediterranean to the south, you've got the Rhone River that bisects it up here, that goes all the way up France, up through Avignon, up through Lyon, further north. Again, wine regions all along the Rhone River. So anywhere you see lighter colored here are vineyards. Now, buckle up. Let's go look at our own wine region. Air sickness bags are available underneath your seat. Here we have Napa and Sonoma, and Jeff knows this region very well. How often do you get out there?
I try to go out every couple months, every 2 months.
Okay, that is nice. Quite jealous of all of that. So we've got wine region. We've got Napa County and Sonoma County. And again, maritime influence. You've got the Pacific Ocean, big influence. San Pablo Bay, very, 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 very cold. And then as you zoom in, you have tons. You've got the Russian River. You've got Lake Hennessy. All of this has an influence. And last week, I thought it was fascinating that we learned that the Petaluma Gap AVA is the first and only AVA in California that is not an AVA because of its soil, its aspect, or its climate. It's because of its wind. So it's the only one that has been designated so special because of the wind. Ketcham, by the way, is right here. The entrance to Ketcham Estate is north, just south of Healdsburg, which if you haven't been to Healdsburg, you're missing out. You have the Russian River right down here, just peacefully strolling on by. You've got the hills in the distance that make this area, it's a little bit of a river bottom with the Russian River. Everything here is impacted by the Pacific. The fog comes right over these hills. This is all Pinot Noir and Sonoma and Chardonnay country. They love cool climate. They don't like the heat spikes that Cabernet can withstand and actually kind of craves. The Rosé home for the wine you're drinking with Ketcham is just to the right of Ali Ketcham's house, which is right here. So you can see some of the phosphorus nutrient that has been put down to kind of keep mold down. But owning both vineyards in the family name, this is an extremely steep hill. I don't envy her children as they grew up, because a soccer ball goes down here, it's going to be 20 minutes before you can go retrieve that thing. That's about 7 stories down, and it's not any fun. But this is the Rosé you're drinking, is from the Ketcham estate. It is the perfect quintessential summer wine. Technical term for it is patio pounder, because you can just drink this thing all day long on the patio. Again, it goes with burgers, goes with fish, goes with chicken on the grill. It really a very, very versatile wine, and delicious. I do not have it in my glass because, unbeknownst to me, I accidentally drank the last bottle that was supposed to be saved for this evening. So I'm drinking another Rosé. Jeff, how are you liking yours?
Oh, it's like I said, it is a porch pounder. It is a beautiful, easy drinking. Smells great. Yeah, it's very, very delicious.
Good, good, good. I want to raise a glass to Jeff, who is in Edina, Minnesota, our first Minnesotan guest. I want to raise a glass to Peter for the introduction. Fascinating topic, and jobs report came out today. All signs look good. Debt ceiling got passed last night. Everything looks good. Any threat of, let's put you on the spot, recession or no recession?
Of course, we're always going to hedge. We're still cautious about, are we out of the woods yet? There's still a possibility out there. I think the numbers reports are looking good right now. Indications are strong for the remainder of the year, but we're cautiously optimistic.
That's a good place to be. I'd rather be cautiously optimistic than guardedly pessimistic, right? Or defensively pessimistic. I like cautiously optimistic. On the Rosé for Ketcham, by the way, you're going to get, for those of you that have it, and I'm jealous because we should have just bought a sip kit ourselves, you get some cantaloupe, you get some watermelon, some strawberry, some lime zest, has some great citrus, but I like it because it has some body. It's not bright acidity. Current earnings are not a predictor of future results, said Mr. Jeff G., who apparently has read a footnote or two in a financial prospectus in his life. That is very true. Raising a glass to Jeff again. I want to thank you for taking some time out on your Friday night. I know there are many, many alternatives, children, sports events, sitting on the patio, having a glass of Rosé. So thank you this evening, and thanks Unity Bank for providing us this expertise and this look inside kind of the financial side of things as it relates to getting a loan to start a crazy passionate hobby called winery production or vineyard management. We are going to be back in 1 week. We will be back next week. And Jeff mentioned Francis Ford Coppola, and we're going to be back with one of the viticulturists that used to be with Francis Ford Coppola for 14 years, Lise Asemont, who now is the matriarch of Dot Wines in Healdsburg at Bacchus Landing. Woman knows a thing or two about grapes as a viticulturist, and spent 14 years with Coppola. Now she works with Foley family. So pretty smart young lady, and we're going to be discussing how wine gets its color. I'm not certain we can thank you enough, Sipsters, because you are why we do what we do. And from Jeff this evening telling you how hard it is for these folks financially to, scrape by and make it productive, make it financially lucrative, with a lot of things stacked against them, including Mother Nature, who has a wicked curveball. She's got like Greg Maddox type stuff on a good night. It's tough. They need you. We need you. Next week, it's Bring a Friend to Sip week. So please, the more the merrier. Jeff, thank you so much this evening.
Thank you.
Couldn't have done it without you. Peter, the invitation, again, thanks to you. And if you Sipsters know anybody we should talk to, we're all ears. Thanks, everyone. Be good to one another. Have a fantastic weekend. Cheers.